In the turbulent ocean of exchange-traded funds (ETFs), the Simplify Aggregate Bond ETF (AGGH) stands out as a beacon of stability and diversification. Launched in April 2021 by Simplify Asset Management, AGGH quickly garnered attention for its unique approach to providing exposure to the global bond market. This comprehensive guide delves into the depths of AGGH, unraveling its composition, benefits, risks, and potential fit within your investment portfolio. The AGGH philosophy: democratizing diversification. AGGH's core philosophy revolves around democratizing access to diversified, high-quality bonds. Traditional bond investments often require significant capital and navigating complex structures. AGGH removes these barriers by offering a single, cost-effective solution that tracks the Bloomberg Global Aggregate Bond Index, a widely recognized benchmark capturing approximately 98% of the investable global bond market. Under the hood, a deeper dive into composition. The intricate tapestry of AGGH is woven from a diverse spectrum of investment-grade bonds across various issuers and sectors. It primarily invests in government bonds from developed economies like the United States, Germany, and Japan, offering exposure to stable, low-risk assets. However, AGGH also ventures into corporate bonds and emerging market debt, strategically blending diversification with the potential for higher returns. Key features that define AGGH. Broad diversification. AGGH provides instant access to over 7,000 individual bonds, effectively mitigating single-issuer or sector-specific risks. This diversification helps shield your portfolio from unexpected shocks within the bond market. Investment-grade focus. AGGH prioritizes investment-grade bonds, those rated BA or higher by major credit rating agencies. This focus prioritizes safety and minimizes the risk of credit defaults, a crucial consideration for risk-averse investors. Global reach. AGGH transcends geographical boundaries, offering exposure to bonds across developed and emerging markets. This global perspective captures diverse economic trends and potentially enhances returns. Low expense ratio. With an expense ratio of 0.08%, AGGH ranks among the most cost-effective options within the aggregate bond ETF space. This translates to higher net returns for investors compared to funds with higher fees. Liquidity and transparency. AGGH trades daily on major exchanges, ensuring high liquidity and ease of buy-sell transactions. Additionally, Simplify provides comprehensive fund documentation and real-time data, fostering transparency and investor confidence. Benefits of including AGGH in your portfolio. Income generation. AGGH's underlying bonds regularly distribute periodic interest payments, providing a steady stream of income for investors seeking to complement capital appreciation with yield. Portfolio hedging. AGGH's low correlation with equity and other riskier asset classes makes it a valuable portfolio hedge, potentially cushioning losses during market downturns. Long-term stability. The historic performance of the Bloomberg Global Aggregate Bond Index indicates consistent returns and resilience during periods of market volatility, making AGGH a suitable option for long-term investment strategies. Potential risks to consider. Interest rate fluctuations. Rising interest rates can negatively impact bond prices, leading to potential losses for AGGH investors. However, the diversified nature of the fund can mitigate this risk. Credit events. While unlikely, unexpected defaults by underlying issuers could affect AGGH's performance. Currency fluctuations. For investors in regions outside the USD, currency fluctuations can impact returns based on their local currency. Is AGGH right for you? Evaluating your investment needs. The suitability of AGGH depends on your individual investment goals, risk tolerance, and time horizon. If you prioritize income generation and capital preservation, AGGH's focus on low-risk bonds and consistent income distribution makes it ideal for risk-averse investors seeking stable returns. Diversification. AGGH's broad exposure across various issuers and sectors effectively reduces portfolio risk and complements holdings in other asset classes. Long-term investment horizon. AGGH's historical performance and underlying assets are well suited for investors with long-term goals exceeding 5 years. However, if you are seeking aggressive capital appreciation, AGGH's focus on stability and income may not offer the high returns potential of riskier asset classes. Investing for the short term, interest rate fluctuations and market volatility can impact short-term returns, making AGGH less suitable for immediate needs. Concerned about specific issuers or sectors, while diversified, AGGH still holds exposure to various issuers and sectors, requiring careful consideration of your risk tolerance. Beyond AGGH, exploring alternatives and portfolio construction. While AGGH excels in its core areas, understanding alternative options can refine your investment strategy. Consider high-yield bond ETFs, offering potentially higher returns through exposure to lower-rated bonds, though with increased credit risk. These can complement AGGH for diversifying your bond portfolio, but require a higher risk tolerance. Active bond funds, employing expert management to navigate the bond market and potentially outperform specific benchmarks. However, higher expense ratios and potential underperformance, compared to AGGH's passive approach, require careful evaluation. Fixed income alternatives. Consider options like certificates of deposit, CDs, or Treasury inflation-protected securities, TIPS, for specific income or inflation protection needs. However, lower potential returns and limited flexibility compared to ETFs like AGGH need consideration. Portfolio construction, blending AGGH with your assets. The final chapter of this exploration entails integrating AGGH into your overall portfolio. Consider your investment goals. Align AGGH's income or diversification strengths with your specific objectives. Risk tolerance. Assess your comfort level with the potential risks of AGGH and how it complements your overall portfolio risk profile. Time horizon. Match AGGH's long-term suitability with your investment timeframe. Asset allocation. Determine the appropriate percentage of your portfolio to allocate to AGGH based on your overall asset mix and desired diversification level. Concluding thoughts. AGGH, a beacon in the bond market. In conclusion, the Simplify Aggregate Bond ETF (AGGH) shines as a beacon of stability and diversification in the complex landscape of bond investments. Its broad exposure, income generation potential, and low cost make it a compelling choice for a wide range of investors seeking long-term capital preservation and risk mitigation. However, understanding its limitations, exploring alternative options, and carefully constructing your portfolio with AGGH in mind are crucial for success. By navigating these considerations, you can leverage AGGH's strengths and build a robust, well-diversified investment portfolio that aligns with your unique financial goals.